Hey guys, Britt here. Welcome to End Times Bible Prophecy. Make sure to hit the subscribe, like, share, and restack buttons. Well, are we about to see bank runs? I believe we are. What we're seeing is very concerning. We're seeing a number of developments that tend to tell me that we're going to see many bank failures in the very near future. First, I want to turn your attention to this. This is the Substack, brittgillette.substack.com. If you missed this article that went out yesterday on quantum computing and the coming global empire, make sure to go check that out. We talked last week about a major breakthrough that took place in China. And this article walks through the process of why that matters and how it very well may lead to the fulfillment of many of the prophecies written in the Bible. So make sure to check that out. I'll make sure to pin the link at the top of the comments as well. That's on brittgillette.substack.com. So back to what we're talking about. Are we going to see bank runs? I believe we're going to see a reemergence of the crisis from March through May of 2023 when we saw the collapse of the failures of the second, third, and fourth largest banks in U.S. history. We saw Credit Suisse, a global systemically important bank, essentially fail and be forced to be acquired by UBS. And so many programs were put in place. A lot was done to sort of paper over that crisis and kick the can down the road. But I believe we're at the end of that road now. So we're going to look at what's happening right now that points to, it should be concerning to everyone. And we're going to talk about why it matters from a biblical standpoint of what Bible prophecy has to tell us about the end times and how this relates to that. So we'll walk through that step by step. So let's start here. This is from Friday in the American Banker. Oklahoma bank fails amid claims of false and deceptive bank records. So again, this came out Friday night. Small bank, not a big bank. This was the First National Bank of Lindsay in Lindsay, Oklahoma. Again, that's not going to lead to the banking system falling apart. But we've talked numerous times about when the problems come, it's going to be on a Friday night, right? They knew about these false and deceptive bank records prior to Friday night. Why did they wait until Friday night? This is what they do. They wait until the bank closes on Friday. That way it gives them the whole weekend to sort things out, to send their messages out to the public. What do we need to be transparent about and when? So that by Monday, maybe panic won't ensue. Whereas if they tried this on, say, a Tuesday, you only have a few hours until things are supposed to open on Wednesday. Plus, they figure on a weekend, most people are relaxing. They're not paying attention, particularly on a Friday night. So that's why they tend to do this stuff. And that's why I say, make sure you have a deep pantry, fill your gas tank up on Friday, because eventually, not necessarily right now, but eventually there will come a Friday where it won't be a small bank in Oklahoma. It will be the entire banking system get shut down for a bank holiday, as we had during the Great Depression. And that may last a few days. It may last 3 weeks. I really don't know how long that's going to last. But within a few days, wherever you are, you're going to find that food and fuel quickly go into short supply because the credit markets will be frozen and the economy will stop during that time period. So make sure that you're always prepared on Fridays. So let's take a look at this first piece of information that we have. This is from Zero Hedge on Twitter. It says U.S. banks suffer biggest weekly deposit outflow since the Silicon Valley Bank crisis. And they have this chart here showing how far that goes back. That links to this article on Zero Hedge where they state the same thing in a headline. And we can come down here and look at that same chart, but it says that is the biggest weekly domestic deposit outflow since the Silicon Valley bank crisis in March 2023. It says, as a reminder, it's tax filing extension deadline time, which probably explains some of this. However, this is the largest mid-October deposit outflow since at least the Great Financial Crisis. And guys, a similar crisis to that crisis is brewing. How can I be so sure? Well, let's take a look at this. This should be very concerning to people. So this is the U.S. 10-year Treasury. So this is U.S. debt. Investors, I guess, lend dollars to the U.S. government for 10 years, and they get a 4.2% yield as of the time that I'm recording this. But let's look back at this. So this yield was a low of 3.61 on September 16th, not long ago. September 18th, the U.S. Federal Reserve announced a 0.5 point rate cut. And the result, typically when they do that, is that these yields go down to reflect that. Instead, the 10-year yield is up almost 0.6%. So it's up more than 0.5% on that rate cut. So guys, the 10-year is what many mortgages are based on. And so the idea that, well, rate cuts are coming, the economy is going to be better. No, right? Not because the rate cuts aren't working. And that's a huge red flag. We'll talk about that more probably later in the week. But for the standpoint of what we're talking about here, we've mentioned when the yield goes up, when the percentage that is paid out to the investors go up, that means the price of that 10-year Treasury is going down. And that's very significant because a lot of the big banks, they bought a lot of these 10-year Treasuries back in 2020, July 2020. Look, in the summer of 2020, these were under 1%. So all of these Treasuries they bought back then are now priced lower. They're underwater. They're trading for a lot less than what they paid for them. And the hope is that by cutting rates, the Federal Reserve could alleviate some of the stress on the banks, on those unrealized losses that we've looked at before and we'll look at again in a moment. But that's not happening. So what does this all mean? Well, let's go take a look at this tweet right here. This is from Porter Stansberry. He's founder of Stansberry Investment Research. And he writes, here's the quiet part out loud. So this is from Friday, it appears. Or no, from Saturday. We're going to look at something he put out on Friday as well. But he said, here's the quiet part out loud. With 10-year yields at 4.08, and again, that's on Saturday. Now they're at 4.2. The losses on held-to-maturity securities at America's largest banks are going to have dramatically worse prices, leading to big losses that, thanks to ridiculous accounting rules, they are allowed to hide. So, who is hiding the most? He says, we know there's a direct and inverse link between the value of these roughly $2 trillion in securities and the 10-year Treasury yield because the Fed itself conducted the correlation study, which I cited in an earlier thread. The losses I estimate below are based on today's yields. However, if, as I believe is inevitable, we see yields pushing higher, and we just pointed out they're higher since he wrote this on Saturday, especially if when they reach the 4.5% range, the losses on these banks' held-to-maturity portfolios could easily lead to more bank runs and failures like occurred at Silicon Valley Bank and First Republic. And then he goes to cite these banks in this list. And I will put a link to this. I'll pin it at the top of the comments so that you can go check this out for yourself. I'm not going to bore everybody by reading every single one of these, but we'll look at the first few. He talks about UBS Americas. 99.9% of their securities are held to maturity with implied losses at current yields of $1.4 billion. Prosperity Bank shares, 96.6% of their securities are held to maturity with implied losses at current yields of $1.9 billion. So, guys, these banks are allowed to carry these under their accounting rules as if these losses haven't occurred. But, and again, we've pointed out these unrealized losses, it's true, they're unrealized until they are. So as happened with Silicon Valley Bank, when the depositors come to the bank and say, I want my cash, we pointed out since March 2020, the reserve requirements on banks in the United States is 0%. So in order to get that cash to give to depositors, they have to sell these securities. And at that point, they become realized losses. So once depositors wake up to this very quickly, these losses could become realized. Let's look at number 3. This is of particular concern. We'll talk about this more in a moment. Bank of America, 78.4% of their securities are held to maturity with implied losses at current yields of $131.6 billion. Wells Fargo, implied losses of $50.4 billion. These are two of the largest banks in the United States. They're considered global, systemically important banks, meaning if they failed, it poses a grave threat to the entire global financial system, meaning there will be contagion throughout the financial system and the credit markets would freeze up, as we've been warning you need to be prepared for by having a deep pantry and making sure you fill up your gas tank every Friday. So again, JP Morgan is listed here, State Street, Charles Schwab, US Bancorp, Citigroup. These are some of the largest banks in the United States. Again, I'll post this link so you can go look at that on your own. He says, you can, of course, quibble with my estimates. You can likewise argue with my higher bond yield forecast, but I don't think it makes any sense for almost half of the securities owned by our largest banks to have completely made up marks. And by that, he means valuations. They're just made up. Every depositor should know on a daily basis the value of his bank's assets. Otherwise, the likelihood of a calamity is virtually certain. Likewise, it should be considered criminal securities fraud for these banks to award bonuses and equity grants to their executives when in reality, these bank earnings, if calculated honestly, would show massive losses. This entire held-to-maturity scam allows the banksters to take huge risk with our money and to only count their coin flips when they're winners. So heads, they win. Tails, you lose, right? If they fail, well, they're going to call for a taxpayer bailout. If they succeed, well, look at all these profits I generated, and they'll take them. He says, this is fraud on a massive, massive scale, and you, my fellow American, are paying for all of it. So let's revisit this chart. We've looked at this a lot in the past. This is straight from the FDIC, the Federal Deposit Insurance Corporation, part of the U.S. government. And here we have securities held at banks, these unrealized losses of $500 billion as of the end of the second quarter. So that would be June 30th. We don't have up to the minute data on this. But again, They cut rates September 18th, and yet the 10-year is up 0.6 of a percentage point rather than down. So this is not, I assure you, this is not what they expected. The Federal Reserve thought, oh, we're going to cut rates. These rates will go down. That'll alleviate the pressure of this. But it did not. And I want to point out again, look at this right here. This little blip, that's the great financial crisis. Right? This little blip is the great financial crisis. This was the repo crisis of 2019 that most people didn't even hear about. And then COVID came along and allowed the Federal Reserve to paper over that problem, at least temporarily. So guys, this is a big problem for U.S. banks. It is not a U.S. banking problem alone. The same problem can be found all over the world throughout the global banking system. This is just data showing the United States. What else are they facing? Well, let's take a look at this. So this is from MarketWatch. It says market bracing for $1 trillion bill on commercial real estate coming due through 2025. It says more than $1 trillion of commercial mortgage debt will need to be refinanced through next year, according to a new Moody's rating report. That's nearly 20% of all outstanding U.S. commercial mortgage loans. The Federal Reserve's pivot to interest rate cuts in September has stoked optimism about commercial real estate and helped improve financial conditions. But a host of issues, including remote work, still high interest rates, because again, they haven't gone down, and a slowing economy add to the risk associated with refinancing these properties, Moody's researchers wrote in a Thursday report. The 10-year Treasury yield, which was at 4.1% on Thursday, 4.2 we just looked at, has surged over 50 basis points above its one-year low set in mid-September before the Fed's first rate cut in 4 years. So again, why does this matter? Well, it matters because of this. We've looked at this as well in the past. Florida Atlantic University College of Business has done a lot of research on the U.S. banking system. And it's pointed out that right now there is commercial real estate exposure that threatens a number of banks. It says any ratio of commercial real estate exposure over 300% is viewed as excessive exposure to commercial real estate, which puts the bank at greater risk of failure. This is taking the amount of commercial real estate loans that those banks have made and dividing it by what their equity is. And if it's over 300%, historically, regulators see that as the bank being at greater risk of failure due to that exposure. Right now, there are 1,871 banks in the United States with commercial real estate exposure greater than 300%. And as you can see, some with levels far higher than that. So we've looked at this before. Think about back in July, there was a property in Manhattan, a commercial real estate property that sold for a 97% discount for what it sold for in 2006. So these properties, they have to be maintained, they need security, they need maintenance, they need upgrades, you have to pay taxes on them. And if there are no tenants, who wants that? So while the cost to build that property, construct that property may have been tens of millions of dollars, no one's going to pay that to acquire something that's going to cost them, that's going to bleed out cash flow month after month after month with no end in sight. And 87% of these commercial real estate loans are interest-only loans, and they're on 5-year terms. They were made at lower rates when they did have positive cash flow in tenants. And so when Market Watch talks about, well, 20% of these are coming due, $1 trillion in the next year, that means those, in all likelihood, those who own those properties are simply going to walk away from them. And that means the bank is stuck with the building. And the bank has to maintain the building and secure the building and pay the taxes until they can sell it, most likely at a massive loss. And so these banks are going to take these losses. So that's hitting the banking system as well. So it's not just the bonds they bought, the mortgages they gave out at 2 and 3% 4 years ago that are now underwater. But they also have commercial real estate issues. And then there's this. We're going to talk about something that's even bigger at the end of this that could crash the banking system, or at least cause a bank or multiple banks to fail in the very near future. And he mentions it right here, right off the bat. We'll talk about it after we read through this next Porter Stansberry tweet. This is again from Friday. He says, "Why is silver soaring?" He says, "The banks are in trouble. These details are public. Berkshire Hathaway sold 260 million shares of Bank of America at $41 for proceeds of $10.6 billion. But Berkshire still owns more than $30 billion worth of Bank of America, but probably not for long. Here's what's not public yet." And guys, I will also put a link and pin it at the top of the comments of a video we did in September, specifically talking about a major bank failure and pointing to Bank of America. And in that, we looked at an Ask Dario piece where he went through the financials of Bank of America and pointed out, effectively, they were insolvent. And that is before what we're going to talk about in a moment, which could potentially wipe them out. I don't have any insider knowledge, just pointing to what's being said and what's being said in these different articles and what the financials are showing. But it's a possibility, as he states here, Bank of America is in trouble, along with a host of other banks, the whole banking system, frankly. He says Berkshire also sold all of its commercial banks, except Citi, since early 2020. Sold 100% of its 346 million shares in Wells Fargo. Sold 100% of its 150 million shares in USB. Sold 100% of its 60 million shares in JP Morgan. Sold 100% of its 12 million shares in Goldman Sachs. And Buffett, because Warren Buffett is the chairman of Berkshire Hathaway, isn't the only well-connected asset manager to dump every American bank. Dalio's Bridgewater, the largest hedge fund in the world, dumped over $100 million of Bank of America and virtually every bank stock too, including JP Morgan, Bank of America, Wells Fargo, Goldman Sachs, Morgan Stanley, Bank of Hawaii, PNC Financial, Citizens Financial, and Capital One Financial. Why? The reason, he says, is there's a $1 trillion plus hole in the commercial bank's balance sheets. No one currently at the Federal Reserve is willing to talk about these issues, but here's what Thomas Honig, former vice chairman of the Federal Reserve, said. Quote, "Guys, I only want to know one question. How long before you fail? Not how complicated you can make the formula to confuse me and certainly confuse the public." He says Honig is not just any central banker. He was head of the St. Louis Federal Reserve Bank for 20 years, from 1991 to 2011, and has long been among the 2 to 3 most respected central bankers ever at the Fed. What Honig warned about is current regulations do not match economic reality. And then there's a little bit of investor jargon, but he says Buffett is a real bank investor. So is Ray Dalio. But as you can tell by Bank of America's share price, which is trading at near all-time high multiples, most of the public is not. In fact, nobody in the mainstream media has bothered to tell the public anything about the truly enormous scope of these problems. I wonder why. And remember back in that FDIC meeting we looked at from 2022, when they were talking about if something like this happened, we had major bank failures. Well, the public has a lot more faith in the banking system than we do. We all know not to do that, but we want them to have that faith. And that's essentially what he's saying here. He's saying Buffett, Dalio, they have inside knowledge. They don't have any faith in these banks, but the public does, at least for the moment. He says, how bad is it? Quoting from the St. Louis Federal Reserve's Bank Capital Analysis Report in June 2022, since 2019, banks have increased security holdings by $2 trillion with a T, increasing the share of securities as a percentage of their assets to 33.7% in the second quarter of 2022 from 17.8%. So they've almost doubled the number of securities they held between 2019 and 2022. And what have we just been saying? Those securities are underwater. They've declined in value significantly. He says, let me make sure you understand what that means. It means that fully 1/3 of the reserves of our biggest banks are deeply underwater. That's because they bought $2 trillion worth of long-term bonds and mortgages at interest rates around 1%. The real market value of these assets is plummeted because of rising interest rates. And we've seen, even though the Fed came in and said we cut interest rates, they didn't go down. It was soaring losses on these assets which led to the run on deposits in the spring of 2023 at Silicon Valley Bank, Signature Bank, and First Republic Bank. These banks didn't fail because they made bad loans. They failed because they owned long-dated Treasury bonds. Total losses on those bank failures were $40 billion. How did this happen? Honig explained, it's a political process, not a market process. The market no longer determines capital in the financial markets, especially in the banking industry. It's now politicians, lobbyists, and the regulators who have to battle it out amongst themselves. So we've pointed out the free market is being thwarted, but eventually the free market asserts reality. You can throw something up in the air and defy gravity for a while, but eventually it will return to where it's supposed to be. He says, therefore, you get these non-market solutions like risk-weighted capital, and banks are incentivized to increasingly leverage their balance sheets. That means they're taking on greater risk. They're taking on debt. They're taking on unnecessary risk. And thanks to the financial repression of COVID, when the Fed's bond buying binges took long-term rates below 1%, there was an enormous amount of interest rate risk in the U.S. bond market in the summer of 2020. To stem the run on the banking system, which, again, this happened back in 2023 in the spring, which threatened to spread and could have easily destabilized the entire system, the Federal Reserve created a new lending program, the Bank Term Funding Program, which offered loans of up to 1 year against the bank's bond holdings. And we've pointed out, at that time, the White House, Janet Yellen, the U.S. Treasury Secretary, said, the banking system is sound and resilient. There's nothing to worry about. And then in February of this year, after the crisis had passed, Janet Yellen went before Congress and spoke and said, wow, I was really worried there for a while. I thought that we were just going to have bank runs all over the world and the whole system would come crashing down. right? But that's not what she told us at the time it was happening. She said the banking system is sound and resilient. So keep that in mind as we go through all this, and I'm sure there are people probably in the comments and elsewhere that'll say, this is much ado about nothing, there's no problems, nothing to see here. But he goes on, he says, key to the program, these bank term funding program loans were made against the face value of the bonds, the collateral, not the market value. This made sure the banks could meet redemption demands from depositors. Loans under that program soared throughout 2023 and peaked in the spring of this year at over $160 billion. And we talked about this at the time. With the feds handing out money, none of the big banks bothered to raise new equity to plug the holes in their balance sheets. This was a kick the can down the road solution. Fingers crossed that interest rates will go back down and that bank balance sheets will be saved, but that didn't happen. In fact, when the Fed began to cut interest rates, long-term rates went higher. That's what we just talked about. And then there's this. In March of this year, the Fed announced that no more loans would be made under that program. As these one-year loans expire, they must be repaid. The current outstanding balances on the program are plummeting down to $66 billion currently. So that means almost $100 billion has been paid back. That's cash the banks no longer have. And $66 billion more has to be paid back by March. That's 5 months. And interest rates keep rising, pushing the value of those 2020 bonds down. Of all the banks that took on interest rate risk in the summer of 2020, nobody took on more risk than Bank of America, which purchased more than $500 billion of long-dated bonds in 2020. Today, Bank of America reports it has $86 billion in unrecognized mark-to-market losses on that bond portfolio. The bank has tangible equity, that is real equity, of $200 billion. If rates go above 5%, I believe Bank of America's tangible equity would be wiped out. And it's not just Bank of America either. The end of the Fed's bank term funding program will lead several major banks to raise more capital. But if interest rates continue to rise, the bank runs we saw in the spring of 2023 will return, with Bank of America most at risk. With $2 trillion in deposits, Bank of America shareholders would most likely not survive a run on its deposits. Right now, the stock is trading at 15 times earnings, top of its valuation range, and Buffett is dumping. So that would be Warren Buffett, the world's most successful investor, has been dumping Bank of America shares for 3 straight months. And guys, there's a bigger issue with Bank of America. Again, I'll pin a link at the top of the comments to the video from last month where we talked about, before we even get to this point, Bank of America was likely insolvent. But there's another issue at play. At the beginning of this tweet, Porter Stansberry noted that silver is soaring. And we see this chart right here. We can see that it's been soaring. From the beginning of the year, it was 22, so it's almost up 50%, or probably is up over 50% since the beginning of the year. Why does that matter? Well, it's long been thought, and there's many rumors that I can't confirm the exact amount, but that Bank of America has shorted somewhere between 200 and 800 million ounces of silver, meaning back in 2020, 2021, they borrowed that silver from someone else. The likely culprit that many are saying is JP Morgan, and that they then sold that silver, but they have to buy it back at some point. And so if there's a silver squeeze, if there's a spike in the price of silver, that could also lead to big problems with Bank of America. So we'll be watching the silver price very closely in the days ahead, because if we do see a run on silver, it could lead to major problems throughout the banking system, not just Bank of America. A number of these banks are believed to have short positions on silver, that if they get a margin call, the same thing happened back in early 2008 to Bear Stearns. There was a spike in the price of silver. Bear Stearns received a margin call they could not meet, and they failed that day. And this was a bank that in February of 2008 was $83 a share was what their stock price was. By mid-March of 2008, it was $2. So in the course of just a few weeks, not even 2 months, they went from everybody thought everything was fine to now the bank has failed. So if we continue to see silver spike up, if we continue to see interest rates going up, this is going to put enormous pressure on the banking system. We're going to see it break. And so let's take a look at this tweet right here from the great Martis. Not sure who that is, but this stood out to me. They say, when you get silver breaking out, you know that a major event is right around the corner. Something big is brewing, real big. This, not good. This is very bad. And then you have this reply here with this meme, and it has a woman swimming, and it says the banking system. And then we see Jaws coming up, and it says gold, silver. So the catalyst that could cause the ripple effect in these failures in the banks and trigger the bank runs could very well be the spiking price of silver. This is a small market. I tend to be very suspicious that some of America's enemies, maybe the BRICS nations, are actually bidding on silver and buying silver in an effort to facilitate this process. It's quite possible. But guys, why does all of this matter? Well, it matters because this is one of the steps in the process that's going to lead us from where we are today to the mark of the beast system that we read about in the Bible. So I'm going to return to this article from mid-August. We've referenced this a number of times. I think it's very important to do so because this is a step-by-step guide as to what's coming. So we talked about the financial crisis and what happened in Japan in early August. No matter what the Bank of Japan does, they're in trouble. There's nothing they can do to avoid that now. They've kicked the can down the road for 35 years. They're at the end of the road. And we're seeing the U.S. banking system's also at the end of its road. So we're going to see limited bank runs, depending on maybe a massive government central bank response. These steps don't have to happen one after another. They can happen simultaneously as well. But I can tell you, if Bank of America fails, there will be a massive government central bank response. And we'll talk in a moment about what you should be doing, what the biblical principles say you should be doing, what I'm doing, Jenny's doing, what our family is doing to prepare for this. It's not the end of the world, guys, but it is a sign of the times in which we live. So if Bank of America fails and you have deposits underneath the $250,000 FDIC threshold, I'm certain you will be fine that the government, if they have to, they will print the dollars to make good on that. Problem is, what are those dollars worth in an environment like that? If you're above that, or if you have a business with accounts bigger than that, you're going to want to put some serious thought into whether or not that's the best decision. Talked about at some point there will be a bank bail-in, because Bank of America, again, if they fail, I assure you the government will move in quickly and bail them out. But if we see a number of bank failures and a number of bank bailouts, you're going to have a lot of political pressure from the citizens saying, we went through this during the great financial crisis. It was just 15 years ago. We said never again with these taxpayer bailouts. Now it's happening again. And that political pressure is going to make the Federal Reserve turn to actually following the law, which got changed after the great financial crisis to avoid bank bailouts and replace them with bank bail-ins. What is a bank bail-in? Well, it means if you have deposits greater than that $250,000 insured limit, well, now those become the banks. They're used to bail out the banks. So if you got $1 million in the bank, here you go. You can have $250,000 back, and the other $750,000 is used to bail out the bank. And we'll give you a little piece of paper that says you're now an owner in the bank, a part owner in the bank, and the shares that you receive are going to be worth maybe a penny on the dollar, that $750,000. Maybe. Who knows? And you may say, well, I don't care about this, Britt, because I don't have $1 million in the bank. Yes, but the company you work for, or the company that your neighbor works for, or your relatives work for, very well may have, and probably does have, $1 million in a bank somewhere. And if that bank is bailed in, then that business fails. And so do all of the other businesses that are counting on that business to pay them for services rendered. So this would have a ripple effect. I think once they do this, they'll do it once. It may only take a few hours for them to reverse themselves, because it would lead to an immediate bank runs on every bank in the world. Something big will blow up as a result of that, and that's when we end up with our bank holiday. So guys, we may, if it's true that some of these big banks are short hundreds of millions of ounces of silver, and we see the price of silver continue to spike the way it has, we may see these steps, 1, 2, 3, 4, 5, 6, 7, in quick succession. It can happen very quickly because, again, we've pointed out bank runs in this day and age, it's not like the 1930s where everybody stands in line and the teller can bide their time, hoping that, if we can just get to 5 o'clock, we can shut the doors, and then everybody has to come back tomorrow, and that gives us some time to figure things out and for people to calm down. We live in a digital age where, with the click of a button, cash can be transferred out. We live in a place where ATMs could be emptied out very quickly. So all of this can happen very, very quickly. It can seem fine for a moment, and then before we know it, it's not fine anymore. And then we get to why all of this matters, because they'll roll out a new system. We know this was bad. The system crashed. We can make everybody whole again. We've got the solution. It's this new system with central bank digital currency, tokenized assets, and digital IDs. We know you lost your 401k and or your life savings, but you can have it all back by just signing up to this new system. And that's how they'll get everybody into the system. And they may actually offer cash incentives for people who didn't lose anything to join the system. Then they'll claim it's voluntary. Then they'll make it mandatory, and they'll say, nobody can use physical cash anymore. That stuff's only used by criminals. And once it's mandatory, well, then we have a system that's indistinguishable in function, capability from the mark of the beast system. They'll be able to control who can buy or sell, cut anybody off, program every aspect of every financial transaction to cause harm to political enemies, enemies of the state. So we would have the mark of the beast system, in essence, wouldn't be the mark of the beast system until we get to the tribulation, but everything would be set up and waiting for the Antichrist and the false prophet once that mark of the beast, once we get to the midpoint of the tribulation. They'll just flip a switch and it'll come on. So guys, that's where we're headed. Now, if you're watching this and you're fearful of what I've been talking about, guys, there's no reason to be concerned. If you know Jesus Christ, then take comfort because he has overcome the world. We're going to have many trials and tribulations here in this world, but Jesus has overcome the world. So you should be seeking peace in Jesus in the midst of all of this turmoil and being a light to others who will not be at peace when these things take place. But no, there are practical steps you can take. Ecclesiastes 11:2 tells us we should diversify because we don't know what risks lie ahead. So if you've got everything at Bank of America, maybe fine. I don't know. I don't know for sure that Bank of America is going to fail. But based on the things we looked at today, it's probably not a good idea to have everything there. So I'm not saying you go close your account or you take everything out, that you pull all the cash out and throw it under the mattress or bury it in the backyard. But the Bible says you should diversify because you don't know what risks lie ahead. So the Bible is saying, well, you should probably keep a little bit in there. Certainly anything under $250,000, I wouldn't have anything above that in any bank. But then you need to, part of diversifying means you have some cash that's maybe buried in the backyard or underneath your mattress or somewhere else where you can get a hold of it. Part of diversification means maybe you have some pre-1965 quarters and dimes that are real money, that are silver, to guard against some of these things happening. Having a deep pantry, pre-buying the food you're going to eat. Food you're going to eat anyway that has a long shelf life, go ahead and get it now. So maybe you take, let's say you've got $10,000 in your bank account. Maybe you take $1,000 of that and go to the grocery store and buy $1,000 worth of food you're going to eat anyway that has a long shelf life, that isn't going to go bad. Worst case scenario, you just eat it over the course of time and you don't have to make as many trips to the grocery store in the months ahead. Because, guys, odds are those grocery prices will be higher months, weeks down the road than they are now. So you're not gonna go, I can't believe I bought these groceries, and here I am 6 months later, and the price of groceries has gone down 20%. Almost certain that will not happen, right? None of us is going to be saying that. None of us is going to be saying, really regret having purchased some groceries ahead of time. I think that's a good idea to do. It's a prudent, wise decision to make. The Bible tells us when we see danger coming, the prudent person makes provision, gets out of the way, but the fool suffers the consequences if they do nothing. So make sure you're diversified, get out of the way of these things, make sure that you're strong spiritually, that you're right with the Lord. Make sure to prepare yourself emotionally as well. And set yourself up in a position of strength so that you can be a light to the people around you and you can show the light of Christ to the people around you. As I know this sounds bad, and again, none of this should be shocking if you've been watching this channel. We've been talking about this for quite some time. But guys, this is a perfect opportunity. This is an amazing opportunity if we see this happen to share the hope you have in Jesus Christ with your friends and neighbors, because I assure you, Bank of America fails unexpectedly due to, spiking price of silver, a number of people around you are going to be in panic mode. And as we said before, you don't need to be in panic mode. Okay? You just make sure you're making prudent decisions, that you're preparing, that you're mentally prepared for what's coming. If you've done what you can do, then you can be at peace. You can be at peace in Christ, and that will be a witness to the people around you who are not in a state of peace when these things are taking place. So, guys, make sure to stay grounded in the Word, grounded in Jesus, that you have your eyes fixed on Him, because that is what matters. Jesus is what matters, not the things of this world, not what we're maybe about to go through. But guys, this is all taking us, it's setting the stage for the tribulation period. And that tells us how close we are to the return of Jesus. And when you think of the words of Jesus saying, when you begin to see all these things, know that I'm near, I'm right at the door. We're seeing all the things Jesus and the prophets said to look for in our day and time. That tells us how close we are. So guys, take advantage of every moment you have, again, to share the hope you have in Jesus Christ with as many people as possible. So what do you think? Leave your comments below. Make sure to hit the like, share, subscribe, restack buttons, and God willing, I will see you on Friday. Bye. If you want to learn more about the end times and Bible prophecy, make sure to visit my Substack at brittgillette.substack.com. There you'll find my latest videos and articles, as well as notes, where I share the latest news headlines, the articles I'm reading, and the videos I'm watching. Subscribe for free, and each new post on Substack will be sent directly to your email. Just scroll to the bottom of the homepage and hit the subscribe button. As an added bonus, your first welcome email will include a link to a copy of my free ebook, 7 Signs of the End Times. Also, make sure to check out all of my books. Just look up Britt Gillette on Amazon, Barnes & Noble, Apple iBooks, Google Books, Kobo, or anywhere books are sold. Thanks for watching today, and until next time, keep your eyes fixed on Jesus, the author and perfecter of our faith.